Hello, silver has invalidated a wave 4 for the bears, so now I am looking into 3 different scenarios. So the first bullish scenario is counting this as an ABC, W, wave X, ABC in a wave Y finishing a double zigzag. And afterwards we are looking for a wave 1, 2, 3, 4, 5, taking out this high and continuing the trend. The alternative, counting this exactly the same, with a W here, but then ABC and a W of a lower degree, and then ABC wave X, wave Y to finish wave X of a higher degree, and then wave Y. And then we are moving up, taking out this high, because this is a corrective structure as well. So the only pure bearish scenario that we have is this 1, 2, 3, 4, 5 in a wave 1, ABC 2, and then lower degree 1, 2, 3, 4, 5, wave 1, wave 2, 3, 4, 5, 4, 5, and so on, looking for way lower prices. So the probabilities for these, are we finished here with our double zigzag? If we are, then we need to count this move as a leading contracting diagonal. You can count this as a wave 1 and then ABC like that, but wave B hit a very uncommon Fib target, which lowers the probability that this is indeed a wave 1, 2, 1, 2, 1, 2, 3, 4, 3, 4, and so on. So therefore, a leading contracting diagonal have the higher probability than a 1, 2, 1, 2. We can still go up like this without going down, but that is more hindsight counting because, as I mentioned, this has a higher probability than the 1, 2, 1, 2s. So here in a leading contracting diagonal, it is important to remember also that a contracting diagonal, a leading one, has a lower probability than a corrective structure. So it's a very low probability structure in itself. But nonetheless, if we are finished here with wave 5, we are looking for a retracement, a deep retracement, somewhere here in this box. If we move past this box here and hit this line, then it's a low probability wave 2, moving beyond the 63.225. So if this is hit and moving beyond, then this has a lower probability of being a wave 1. And the invalidation is taking out this low. And it's also very important to remember that in a WXY, the minimum target here for a WXY is here at an 113.700. And I'll explain why, because a WXY can either be finished here or it can be the start of a flat. So wave A here, and then you have wave B, and then you are moving down in a bigger wave C. But if this is an ABC, a flat, then we need to reach this minimum target, which is the minimum target for a regular flat. So that is very important to keep in mind as well. If we move on to the bigger WXY here, so W same as before, but a lower degree, W, X, and then Y in a wave X and a wave Y. Perfectly fine. The only thing that the bears do not want is hit this line. Because if we hit this at 100.255, then it is a low probability for a deep double zigzag correction. So if we move up here, that is positive for the bulls, because then it has a higher probability that this wave Y is either a flat or a triangle like that, and then we move up. It is a lower probability than that we are looking for a deep zigzag afterwards. So yeah, keep this line in mind, because that's very important, at least what I'm looking at. And the last scenario here, the deep impulse. So 1, 2, 3, 4, 5, 1, ABC 2. Here, 1, 2, 3, 4, 5. Wave 4 doesn't break any rules, but it is breaking a guideline that it isn't even reaching the 38.2 Fibonacci time target, thus lowering the probabilities for this being an impulse down. So time is never an invalidation, it's just a guideline. But that lowers the probability, because this counts better as an ABC like this. And afterwards, this we are then looking for a wave 2 to have either finished or moving up a little bit more and then moving down. But the bears here do not want to take out this line. So that is at 92.340, because if we do, then this has a lower probability of being a wave 1. And then it has a lower probability that this is a wave 1, 2, 1, 2. And also here, changing structure is not what you want to see in a 1, 2, 1, 2 especially. And also here, the low probability wave 2, that is for this wave 1 and wave 2. So if we hit this, yeah, the bears doesn't really have a good option left. And also I have written here a time target. If we move up here and make a new high after this at April 29, then it is a low probability as well for a 1, 2, 1, 2. Then we don't even need to hit this line for it to be a low probability 1, 2, 1, 2. Then the probabilities change from this, from the bearish scenario to this. So higher probability of being a wave X. And also the manner of how we reach this wave X is also very important. But it's a very important timeline to keep in mind if you are a bull, because you want to see a new high after this date and time. So yeah, that is what I am looking for right now. I hope this was valuable to you. If you found this analysis helpful, feel free to subscribe. And you can also find Elliott Wave resources at mellantrading.com. I'll see you in the next one.